challenges of the blockchain innovation for the U.S. financial regulators. We would like to welcome to the stage Jason Brett, who's the president of Keybridge Advisors. Welcome, Jason. We also have the CFO of Metallicus, Irina Berkon. We have the CEO for the Association of Digital Asset Markets, Bao and Bao Nguyen, partner at Skadden.
Hi everybody, how you doing this morning? Can you hear me okay?
Yeah.
Great. My name is Jason Brett. I am a former federal regulator at the FDIC, where I worked from 2008 to 2011. So I had the opportunity of spending time during the financial crisis of 08 and 09 with all the different banks, AIG, Bank of America, Merrill Lynch. Saw quite a bit and spent about 5 more years doing different things in regulations. And then around 2016, I got introduced into the wonderful world of cryptocurrency and blockchain and how different things are impacted regarding this space. I'm really excited. I personally think you might have the best panel, so I'm gonna go ahead and start with the introductions from left to right. First we have Irina Berkon, who is the CFO and a board member at Metal. Irina is the Chief Financial Officer of Metallicus with over 15 years of progressive hands-on experience in corporate finance, IPOs, M&As, compliance, regulatory functions, and corporate structures. Irina's current focus is on her work at Metallicus, Inc., where she is helping to expand the scope of MetalPay, make inroads for the Proton blockchain, and establish First Blockchain Bank and Trust, a proposed financial institution. With extensive experience delivering publications, talks, and panels on topics such as fintech, blockchain compliance and leadership, Irina brings a breadth and depth of knowledge rarely seen in this industry. Irina is also managing director of Golden Seeds, one of the nation's most active early stage investing firms focused on women-led businesses. Irina, welcome. It's a pleasure to have you here. Next we have Bao Nguyen, a partner at Skadden. Bao is a partner at Skadden and advises a wide range of financial services institutions. He provides counsel on a broad range of issues, including the regulatory policy and business aspects of financial services, banking, fintech, cryptocurrency transactions, banking charters, and enforcement issues. Prior to joining Skadden, he held senior positions within the Federal Reserve and the Office of the Comptroller of Currency, OCC, including as acting chief counsel and most recently as principal deputy chief counsel at the OCC. Mr. Nguyen uses his extensive regulatory experience in perspective to advise clients on a host of strategic matters that are critical to their success. Bao, welcome. And last but certainly not least, we have Michelle Bond, who is the CEO of the Association for Digital Asset Markets. Prior to joining Adam as its CEO, Bond served as the global head of policy and regulatory affairs at 2 fintech companies, where she developed and executed global regulatory strategy for digital assets, blockchain, and global payments. Bond has also worked at Bloomberg, serving as head of global regulatory affairs, and she is an expert in securities, derivatives, banking, and fintech regulation. Bond previously served as an international counsel at the U.S. Securities and Exchange Commission for implementation of the Dodd-Frank Act. Bob was also a subject matter expert on the U.S. Senate Committee on Banking, Housing, and Urban Affairs, and for the Dodd-Frank Act and its technical corrections bill, and as well as the Jumpstart Our Business Startups Act, or the Jobs Act. Bond launched her legal career at the Financial Industry Regulatory Authority, known as FINRA, before practicing law at Hogan Lovells and Wilmer Hale. Michelle, welcome. So I'm going to start off with a broad question. Why do you think, and this is for everyone to chime in on, do you think blockchain technology is particularly difficult for regulators to understand and more specifically to regulate. And Michelle, I'd like to start with you. I think the SEC has been making a lot of pronouncements about this space. A lot of times people talk about the old laws from 1930s that are difficult to apply to this new ecosystem. But we also hear that it should be very clear to us what is regulated as a security and what is not. I know you've spent a lot of time in this space. What are your thoughts about what's been probably the principal regulator involved in this space, and why do you think there's a challenge for blockchain technology in particular?
So,
Go ahead.
is it on now? I can be really loud. I don't think it works.
Oh, there we go.
Oh, hi. So, as Jason mentioned, I am also a former regulator, and I was at the SEC, I was international counsel, and actually I worked on Dodd-Frank and on swaps. I worked on the cross-border derivatives rules, and I see actually a lot of commonality between between the swaps market and what had to be implemented even internationally and with crypto now. I think there are a lot of corollaries. But that being said, yes, laws were written in the 1930s. We have, the Exchange Act. We have, we have laws from the 40s, and honestly, they've all been adapted. And I don't think we need a brand new regulatory regime. I think that it's totally workable for us to be able to fit digital assets into the current framework. The issue is that the regulators, it would be helpful, especially from the SEC, if they were to give some more guidance. So, for example, one of the things that Commissioner Kurz has been really pushing for is to do some digital asset rulemaking. And what we have seen is that the SEC has been much more focused on the enforcement side. And I feel like that is difficult when you're a member of the industry, because you're not getting a lot of just clarity through the policy rulemaking process. You're getting it through the enforcement process. So that's one of the issues. I think there are a lot of issues that the SEC could really hone in on that would be extremely helpful. One of them is custody and defining what a good control location is, and there are a whole host of different things that the SEC could actually do rulemaking on, guidance on. DeFi is another one. I think there are a lot of different spaces. But that being said, I do think the SEC is working. It's just that it's not coming out quickly enough. And what's happening is we are seeing just like the major enforcement headlines. So it is what it is. I think I have a tremendous amount of respect for the SEC. I have a lot of friends there. I work there. They're really smart people, and they're really trying hard. And I do think in the end we're going to come to a really good place. But I think the laws work. We just need some more guidance. Where I think Congress might be helpful is probably on some of the definitions, on the scope of the regulatory authority. I think there's this big question about who regulates the spot market. Certainly the CFTC has the fraud enforcement authority, but they don't have just the regulatory sort of capacity on a day in, day out basis for crypto spot. And that doesn't exist for gold. That doesn't exist for oil. That doesn't, and that's a real policy question. Like, do we want the CFTC to be a spot regulator? Do we want an SRO? These are all questions that need to be answered. But I think the laws work. I'm really proud of the system that we have in the US. And I think we can improve upon it. But this is one of the reasons why we have like some of the best markets in the world. So that's my take.
Bao, when you look at the federal regulation system in the United States, it's very unique. We have a lot of different regulators that cover a lot of different areas. When it came to cryptocurrency and blockchain, I think there was not a lot that came out of the banking regulators, and certainly your time at the OCC changed that. How do the banking regulators fit into this equation when we look at the way the US is regulating these digital assets and blockchain? And what kind of guidance do you think they need to provide or have already provided around this ecosystem?
Yeah, I would say I think the banking regulators are playing a very big role and will continue to do that. I think the challenge in the United States is we have a purposefully designed a system that is purposefully designed to be complicated. So you have state regulation, and I think the states will continue to be the tip of the spear in terms of their willingness to allow innovation by their banks, by their banking institutions, to experiment with digital assets. And I think what you'll see is the federal regulators observing that in the first instance, and then accepting some or all of it slowly. That's been the way it has worked in the United States on a whole host of processes of innovation. We think of the states as laboratories for experimentations, and I think that's a healthy thing. I think at the federal level, what you should expect in the coming years is a fairly continued level of uncertainty, because the current set of regulators, who they are, the policy positions that they have, I think are naturally very concerned about the risks associated with digital assets. Money laundering risk, the ability of banking institutions, financial institutions that may want to become banks to be able to manage those risks. Those are sort of like the big challenges, and I think it's not that I don't think they want to. I think it is just very difficult to translate the way you think about the capital associated with a mortgage to, say, the capital and liquidity that you might impose on an asset whose price could swing 5,000% in the course of 3 hours. So I think those are the kinds of challenges that the regulators think are before them, and that is what is causing them to sort of take it slowly. I think the other thing that is really important is they naturally view themselves as the cooling saucer of the system, right? So they view themselves as the people responsible for taking the punch bowl away when the party starts getting a little rowdy, or when the tea is too hot. They are the place where the hot water gets cooled off a little bit before it goes into the system. So that sort of mental process that they have in their head affects a lot of what you're observing in the marketplace in this space.
And they also get hauled in front of Congress when something goes wrong. So that's another challenge.
Yeah, they get hauled in front of Congress, and that should be a signal for Bao, Michelle, and I, for any of you while you're here in Las Vegas. If any of you see us show up as your next blackjack dealer, just walk away from the table, because we're probably the coolers. Irina, I'd say Bao and the OCC in general sent out certain signals that changed the course of a lot of maybe what you ever expected to encounter in terms of dealing with regulators. And obviously Metallicus has been working on the state-by-state level for getting its metal licenses and so on, but certainly your company has very much been in the news of note as pursuing a federal bank charter. Can you tell us a little bit about that journey?
Sure, thank you, Jason. So Marshall and I frequently get asked the question, why are you doing this? Why did you decide to call up the OCC, the FDIC, and the Federal Reserve, and people like Jason and Bao and the lawyers that we've hired to do that. So I've been at Metallicus for a little under 2 years, and a few months after I joined, working on running payroll, and all of a sudden I would get a letter from our bank saying, we no longer want to service you because you're a blockchain crypto company and we don't understand the risks surrounding your business, so we're closing your bank account by the end of the week. Now I have 30 people to run payroll for, I have rent to pay, I have vendors, we are a big legitimate company. We have money transmitter licenses, we had legal opinions, and all of a sudden the bank just says, you're done. So I said, okay, how difficult can it be? I call up another bank and they say, don't even try. I call up another one, and I call up my CFO friends and my other finance contacts, and they said, you're out of luck. You might as well just start, giving your employees cash instead of payroll, because you're not going to get a bank account because you're a blockchain crypto company and nobody knows how to regulate you. So we ended up finding a bank that is very friendly. We still go through many iterations operations of audits with them, so we are paying our employees payroll. But then Marshall and I kind of looked at each other and said, what's going on here? Why are we, the ones, and I come from a regulatory background as well, having worked at public accounting, why am I being kind of pushed aside by the banks? We said, let's just start our own bank. Like, okay, I mean, how difficult can it be? We meet in LA with Jason, we throw together a plan, and it's a little bit more difficult than that. But what I realized throughout this process is there are we talk a lot about how blockchain can solve the problems of banking the unbanked, but we are actually unbanked ourselves. The blockchain and crypto companies, the blockchain and crypto developers, crypto investors, we are unbanked. And this is just one example. I think between Marshall and I and a few people at our company, we get at least one call a week asking, can you help me? Can you help me open a bank account? I just raised money from a top VC and I don't know how to receive that cash in my bank because my company doesn't have a bank account. Can you help me buy crypto? I'd like to invest, I'd like to buy some Bitcoin, and my bank just sent me a letter saying I no longer can use my bank account to buy crypto, to link it to companies like MetalPay. The list goes on and on and on, and we realize that there are all these unbanked people out there who are very wealthy, potentially individuals, or companies who are employing lots of people, pushing the economy forward, and we can't get bank accounts. So this is kind of the inspiration that I have every day when I'm getting ready to talk to the regulators, that I'm going to solve a problem for an unbanked population of blockchain and crypto companies and investors.
One of the areas of concern is about the unbanked, and there's a question as far as how the banking industry has left certain people out. The FDIC in 2019 showed that 5.4 million people were unbanked, and that the St. Louis Fed has talked about these banking deserts. There are over 1,000 of them, and 3/4 of them are actually in rural areas, which means that within 10 square mile radius, there's no banks within range to help people. But I do think there is an ability for this new industry to help banks. I think that unfortunately we hear even the industry players themselves have challenges getting involved in the banking game. But how do you see DeFi and all these new opportunities, Irina, help develop opportunities for people, for families that are unbanked, and how do you think that this industry should be maybe commended for its attempts to improve that scenario? Yes.
Oh. Well, technology is, what drives everything. We just heard Marshall talk about it, and the way I see it is, if somebody wants to do something, they will. So we have these developers. There's going to be a panel later about the actual blockchain. We have these developers that will create whatever they want to create. The problem is, how do you push it out into the population and regulate it so people can use it and don't get hurt by it? And the unbanked population is the one you, Jason, are talking about, not the one that I'm talking about. They will find a way. They will find an easier way. If they can't walk to a bank, well, they can get a phone, and on that phone they can have cryptocurrency. And if if whatever they're doing on their phone with cryptocurrency is not regulated, then that becomes a problem. So that's where the intersection for me is.
Can I
Yeah, please.
I think I would say digital assets, crypto ledgers, and sort of the explosion of technology is really important for diversity and inclusion, and for advancing, solving for the problems that you just noted, underbanking, people being unbanked, in sort of concrete ways. Sort of think about this. When you sort of are a person who makes, barely minimum wage, federal minimum wage, $7 an hour, and you want to sort of send that money home, say, to a relative located in another country, you don't have a bank account, you might go to Western Union, you may go to another money transmitter, but the fees on that is extraordinary. We're talking about billions and billions just in certain portions of the United States. And if you're sort of able to and you have wait days, potentially a medical emergency has occurred in your grandmother's home country, they need the money and the money's not there, right? So the value that crypto brings to this is the ability to transfer that money at the speed of light, almost, and to be able to do that in almost a frictionless fashion, and therefore reduce the cost that has to be passed on to the consumer. That's the sort of value in terms of bringing people who are not in the financial services space into the financial services space, bringing what would have traditionally been 10 years ago only services for the middle class to the working class. And I think that's a part of the conversation that we don't have often enough when we talk about cryptocurrency. We think about all of its trendy, ability to sort of move this and move that and all that, but we don't think about the value it has for society. And I mean that in a real positive way, in sort of really fundamentally enabling people to take control of their financial lives, because they're able to save what to us might be a small amount of money, but to them, $400 over the course of a year in terms of savings from something as simple as not having to pay the Western Union fees is amazing and very valuable. And I think that's really, really important to sort of think about the value that crypto brings to that.
Definitely. Do you think who should have the role of innovation? We've seen the U.S. Post Office start to do an innovation program about looking at postal banking. We've heard about postal banking for a while. We can't walk to a bank, but pretty much everyone should be able to get to the post office. And there is a historical element where the post office has been involved in this. I think it's quite another to say that the post office should maybe be branches of the Federal Reserve. And then that goes to questions of, is that even the Federal Reserve's role, to start to help with this crisis about unbanked individuals? Bao, do you see it? And I guess the larger question, is it the government that should be not only regulating but innovating, or should we wait for the private sector and work with them on this?
I think in the United States we have a great model, which is we allow private businesses to innovate, and then to the extent that there needs to be regulation, the government can sort of step in. My observation just on the postal banking thing, I think that's a little bit of not much there, right? We're talking about $500. We're talking about it being quote unquote a gift card. So the program is you're able to deposit up to $500 in a check, and in exchange for that, you get sort of basically a Visa branded gift card that you can use anywhere. And there's a fee to that. That seems to me the kind of stuff that we were just talking about, pretty expensive on low income consumers. So I don't know that that's right. I think the other thing to be worried about is if the government is going to become the commercial banks for you and me and everybody else in the country, where does that leave industry? Where does that leave private business? Right? And I think those are actually the actual policy debates that are happening right now among Jay Powell and Yellen. And that's sort of the things that's sort of causing conversations around a digital US dollar very, very difficult, or a conversation around, do we even want to allow a central bank digital currency to take place? Because there are huge ramifications, not only for the Federal Reserve, but for the markets and for us as individuals, if there is such a thing. We can get more into that if you guys want to, but that I think are the sort of difficult questions about having the government involved in innovation.
Michelle, what about for your members and just institutions in general? How do you see them thriving in this environment? What are some of their biggest regulatory challenges? And how would you like to see the regulators maybe interact better to help develop out your member institutions that can benefit everyone in terms of jobs?
So the one thing I'm really proud of is, our membership roster, we have over 30 firms at ADAM, and there are a variety of different kinds of market participants. We have exchanges, for example, FTX and FTX US. We have market makers, we have custody providers, members, we have surveillance tools, we have law firms that are members. So we have this like broad-based membership roster that really does represent the industry. The vast majority of our members come from traditional finance. So these are people who are used to seeing a regulated space, and what they did when they founded the organization, and I've been with Adam for a year, but when they founded it in 2018, they said, listen, we know how traditional finance works, and we also know how crypto is right now. There's going to be some regulatory framework. And what they did was they looked at the global FX code and then basically modified it and adapted it for crypto spot, basically. So essentially, Adam has a code of conduct that governs the market. All of our members agree to adhere to the code of conduct. So that code is really a governing document that has rules for market integrity and custody and a whole host of things. So that is in existence. That also makes us well positioned to one day potentially become an SRO. So that's something that our members advocate for as well, because obviously, on the SEC side, the SEC oversees FINRA, and FINRA acts pursuant to delegated authority by from the SEC. And then on the CFTC side, there's the NFA, which is the SRO for the futures market. So one of the things that we've been really advocating for is to have an SRO for digital asset markets that covers not just digital assets, like on the commodity spot side, but also digital asset securities that would act pursuant to delegated authority by both federal financial markets regulators. So that's one of the ideas that we have been really a big proponent of. That will require an act of Congress. Which we have some really awesome members right now. Senator Cynthia Lummis is one of them, and I think there's real potential here, and I think there could be potential for an SRO in upcoming legislation. I think we're going to see legislation clarifying what the definitions are. I think we're going to see legislation talking about the scope of each agency's jurisdiction, and I think these are all things that I think the industry would really like to see. So yeah, that's kind of it in a nutshell. I will say I'm really proud of our members, because the one thing that I talk a lot about is it's really important to work constructively with your regulator in a productive way, in a professional way. It is no secret, I'm not a big fan of crypto Twitter. So I think it's really important that you have these conversations in a really in a productive way with regulators, as opposed to just taking to Twitter to vent. That's just not a really productive conversation sometimes. So in any event, I'm really proud of the conversations that our members are having.
Yeah, and speaking of Senator Cynthia Lummis from the great state of Wyoming, I should mention we have in our audience Al Fortner, who's the head of Division of Banking in Wyoming, here with us today, and there's been a lot of innovation happening at the state level as we talk about the federal regulations too. Between the federal and state regulators, Irina, can you tell us a little bit from inside, like at Metallicus, how challenging is it to figure out what products and services to use? What does that mean, and would you say compliance is a burden?
Yeah, it's a funny segue, into working with your regulators. So, MetalPay is a digital, fintech company from the Silicon Valley. So you'd think, the majority of our employees and the work we do is development and coding and marketing and going to market with that, which is true, and that's the majority of what we do. But we have a very, very robust and very, very big and pricey, I might say, compliance team. And that is because we are trying to do the right thing with all of the products that our amazing development team can dream up. We know that we can't just roll them out. We have to work with the regulators. We have to understand what kind of licenses we need in which state, federally, and even across the world. Our products are available across the world in the jurisdictions where they're allowed. So just to put in perspective, out of our 60-person company, we have 8 people in compliance. 4 of them are lawyers. We have 3 CPAs in our company. We employ 4 law firms of different kinds of fields that we go to them for. We are always under audit, whether it's internal audit, whether it's external audit from our financial statements purposes, whether it's IRS or FinCEN, and our compliance officer, every time we get an audit, he says, oh, I welcome it, because that means they're going to check that I'm doing such a good job. Like, okay, great, that's one way to look at it. He's very positive. Our employees go through training over and over. I had some developers start and they said, I didn't do anything the first week, I just had to go through compliance training. I said, well, you're working for a regulated company. We talk to the states, we have money transmitter licenses, we're now applying to the bank. So we might be a digital company, a fintech company, but we are really not just that. We are talking to regulators all the time. We have an internal team, and most recently we hired 3 bankers to join our team. Why not? Why not also bring in people who know how to run a bank, who have run a bank, and who know how compliance should work for a bank, and not a fintech company. So my message to regulators is please come regulate us. We are ready, we're willing, we're able, and we really want to bring this to the masses.
And something to think about the next time you read a headline that says cryptocurrency isn't regulated. Bao, what's your take when you hear, the chair of the Federal Reserve, Powell, who corrected himself, but originally said in Congress that if we issue a central bank digital currency or CBDC, that would sort of take care of the problem of cryptocurrency and stablecoins. And he did walk that back, but there has been talk of how Janet Yellen has been discussing the idea that we need to implement the CBDC to somehow provide a money that's not necessarily a private form of money, or provide stability and the risks associated. We've talked about a lot of the positive things of cryptocurrencies, but the government, at least the current administration, definitely views a lot of risks inherent in cryptocurrencies and how a CBDC or central bank digital currency might solve for that. What's your take on what the purpose of a central bank digital currency would be, and do stablecoins already solve that?
Yeah, I think stablecoin already solves it. I think we already have a digital dollar. Most of us don't carry around paper notes anymore. The ledgers exist. They're not sort of cryptographic ledgers, but they're sort of important policies why they're not cryptographic. But if I can sort of just back up to answer your question, I would say what you're hearing is the public sort of evidence of some real serious internal dialogue happening within the Federal Reserve and with Treasury, and it's sort of a substantive policy discussion about a couple of things. One, does the Federal Reserve have the legal authority to do that, to actually issue a central bank digital currency? My view of the Federal Reserve Act is, it doesn't. The way we sort of are thinking about it, which is it doesn't have the authority to issue a crypto protocol from which you can extract a digital dollar. The Fed certainly today has the authority to issue or permit the issuance of stable coins backed one-to-one to the US dollar. That's a debit card, in fact, right? It's sort of like a cardless debit card. Go for it, go crazy. The Fed could call up, any sort of companies, payment processing company, and say, we will permit the issuance of a digital representation of this dollar. There's some parameters around it, but you could sort of largely get there. I think issuing a central bank crypto protocol owned by the US government, from which a digital dollar could be extracted, very, very hard on the current legislation we have in place. That's one. But beyond the legalities of it are sort of the policy questions of, okay, so let's say you can do it and you do have a crypto ledger at the Federal Reserve. Does that mean that each and every single one of us, if we wanted to own a digital dollar issued by the Federal Reserve, has to somehow open up an account with the Fed? Individual human accounts with the Fed? What does that mean then for traditional commercial banking or even traditional payment settlement? Does that mean the Fed will replace will become the bank of natural living, breathing people instead of being the central bank of the United States. So that's a real serious policy question to struggle through. The other thing then is, the Fed's other role is to engage in monetary policy, right? And you do that mostly, since the inception of monetary policies in the 1920s, sort of the way we do it in the United States with the Fed, has been to control the money supply and therefore affect the rates. How do you control the money supply if there's a protocol that you and I are a member of and that we can choose how much we extract in or out of that protocol? It sort of raises fundamental questions about the ability and the character of the Federal Reserve as the central bank of the United States and of the world, and its very, very ability to control things that I think the government wants to control, the money supply, right? So those, I think, are the very serious and I think thoughtful debates happening inside of the institution. And for that reason, I don't think you're going to resolve the debate anytime soon. I know that there are lots of studies that have been commissioned and we're supposed to hear from them. And I suspect that what you'll hear is these are very hard problems and we need to take more time to think about them. And that Congress, what Congress and the regulators should resist doing is rush towards the shiny object because it's new and shiny, and sort of think very carefully about what the right thing is, policy-wise, legally, for the United States in terms of maintaining its competitive position. The other thing I think they are looking seriously at, just to round out the answer, is the experience the Chinese have had in their digital currency and the lack of success. Right? The whole point of cryptocurrency is to maintain some level of pseudonymity. And if the central government owns the money and knows you, and right, those are all fundamental challenges to actually joining the protocol. There are lots of other things, and I'm happy to go into them, but I'll just pause there and sort of say those are serious policy debates that you're seeing glimpses of when you sort of see people say things in public settings.
Michelle, is cryptocurrency perhaps a matter of national security?
Well, when, I'm sure you all remember the FinCEN unhosted wallet debate, we'll call it. So right at the end of the year, right before Christmas and New Year's, FinCEN issued their unhosted wallet proposal that required KYCC. Anyway, I'm sure you all saw it play out. But one of the things that they did was they said it was a matter of national security, and in fact, didn't even want to give the public an opportunity to comment. They wanted to just push as midnight rulemaking at the last days of the Trump administration. They really just wanted to finalize this rule that no one had seen, no one had ever really thought about, and just adopt it. And one of the things that they really harped on was this matter of, it was a matter of national security, and there was major pushback on whether this was really an issue of national security. And then ultimately, we got our comment period. It was first open for 15 days, and then actually Yellen extended, and we wound up having a real comment period. And now FinCEN's at the stage now where they're still reviewing comments and they're figure out what the final rule should be. But we are seeing this national security, regulators are using it to push through rules. Actually, our head of policy at ADAM, he's a brilliant guy. He formerly worked at Treasury under Justin Muzinich. He's former CIA. He just testified in the House in the National Security Subcommittee, and all he did was get grilled about CBDCs and stablecoins. It was an awesome hearing, to be honest. You should catch it if you haven't seen it. It was one of the only positive hearings I've seen on crypto in Congress as of late, so I was really proud of him. That was awesome. But we're seeing this national security angle come up over and over again. The FBI actually just asked us to do a training, so we're going to be doing a 5-series training with the FBI. I had a speaking engagement where I was invited to speak at a location that I had never heard of, and I was like, okay, I asked the public affairs team, could you vet this? I don't know what this is. I went, and it was CIA, FBI, and blockchain. We've seen, we saw Colonial Pipeline, where the FBI was able to recover millions of dollars in funds. Like, there's a lot of really good that the intelligence community is looking at, and they're like, this is great. But in any event, I do think that there's definitely a national security angle. The intelligence community is looking at this. The Congress is looking at it from that perspective, and the regulators are as well.
Yeah, definitely. And as much as we hear about the national security element, one of the other aspects I've noticed, at least in the US, is it seems like millennials want this product and are interested in this product, and that they use their phones all the time. So, I mean, Irina, I'd love you to just give your perspective from the industry. I mean, this is not something that's going away either.
Well, it's not just millennials. I have an 11-year-old who has a Proton wallet, metal pay. She doesn't have a metal pay wallet yet because she's not of age, but she lives in mine, and it's not going away. I mean, the way I see it, the thing is that my 11-year-old does it, and then I have an uncle who is on the other spectrum of the age who is also using it, and both of them want simplicity and the best user experience. They're not going to go into coding, and they're not going to go into a bank either. They don't want to. They want a very clean, fast user experience on their phone, and they want things done yesterday. They want it done quickly. They're not thinking, is this regulated? Is it not? It's on their phone, so it must be okay. They must be able to use it. So I think that this is what we pride ourselves in at MetalPay a lot, is the user experience of our products, and I think that's where it's going into the user experience of the banking industry as a whole. Your phone can't discriminate against you. If you're looking into a Proton wallet, into a MetalPay wallet, it doesn't know who you are, it doesn't know your age, it knows certain KYCs about you. So I think that's a very big deal. It also doesn't know how much money you have. It can't, move you around from one bucket to another. I think that that's where this kind of new generation of the usability is going. That it's all on your phone. It's super easy to use. You're assuming it's regulated. Why do I need anything else?
So this is a question back to you, Bao, a little bit. We were talking about stablecoins, CBDC, and the idea of financial inclusion, right? How do we get that, help those who are unbanked? At the same time, if you look at stablecoins or DeFi stablecoins, we've seen this is private money, and sometimes there can be losses. I mean, after all, we had Mark Cuban, right, who complained that he lost all this money in stablecoins. How could this possibly happen? And I mean, how can we not have sympathy for Mark Cuban, losing some money in stablecoins, right? And now Mark Cuban is very loud, right, to Congress saying, we need to regulate stablecoins. And before you know it, policymakers are saying, yes, we need to regulate stablecoins. I mean, how do we protect the Mark Cubans of the world?
I don't know. He probably doesn't even have a bank account.
He's unbanked.
Yeah, he's probably unbanked. He probably has his own bank. But I think on the serious side of that question, I would say, I think as Michelle pointed out in the beginning, I'll be very candid. I'm new to sort of this space, and I did it mostly because I got a call. Brian Brooks marched into my office when he was the comptroller of the currency and sort of said, we need to do this because it's good, figure it out. So I figured out how to sort of get the banking laws sort of in order to facilitate and allow crypto and banking to start becoming more legitimate. But I think that's to highlight that what Michelle said in the beginning is correct. We have a framework in the United States for regulating financial services. What crypto firms are seeking to do in terms of creating value, storing value, transferring value from one party to another, when you think about life in those very basic contours, that's all a bank does either, right? Create values, place to store value safely, help people transfer value. And then obviously there are all sorts of complications, BSA, AML, consumer protection, data privacy. But the framework is there. I would say that the challenge is probably marked in by his stablecoin from a regulated institution or an institution that was highly regulated or appropriately regulated. And look, if you want to go to a pawn shop, you risk some of the pawn shop behaviors. But if you want to sort of instead, go to a regulated institution to get your financial services, you're going to get a different set of expectations. And I think that to me is an indication of where regulation should go and why regulators should be rushing to understand, to figure out how we can bring this new technology that has a lot of social benefits into the regulated space and not repeat the mistake that we made 11, 15 years ago, where we pushed some exotic financial products out of the regulated space, and it created a financial catastrophe for the country. The lesson there to me is not to sort of say, crypto, you can't become regulated, or you can't be in the banking space, or you can't become a legitimate, publicly valid company, but rather to sort of say regulators should have the mentality of figuring out what is the appropriate regulation and how do we do it in a way that doesn't sort of cause people to have to basically burn up all the capital of the company just to have a charter, right? That I think is the way to think about life, given my experience anyways.
Yeah, definitely. We are just about out of time. Really quickly, Irina, Bao, Michelle's final thoughts, 60 seconds or less, predictions on regulation.
The technology is moving forward. These inventions are not going anywhere. There are kids, adults inventing blockchain, DeFi products every day, and they're amazing, and they will come to life, whether we like it or not, whether the regulators like it or not. And as a MetalPay, we want to help them come to life in a regulated way, so there is no issue with loss or people getting hurt by these products.
I would only add to that everyone should just simply recognize that the regulators are probably 5 to 7 years behind you in terms of understanding this stuff and thinking about this stuff. And so I don't think the answer is that this stuff will not become legitimate and be able to be in the regulated financial services space, but it will take some time because of the difference in the start time is how I would frame it.
Thank you, Michelle.
I agree with everything they just said. I'm also going to say I would expect a flurry of congressional legislation as well in the space. I don't think anything that's going to upend our current regulatory system, but I do think we're going to see a lot of changes.
Great. Thank you all.